Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Currently, the Australian dollar is flirting around the 65-cent mark as markets unwind December's Fed cut expectations, with many Fed officials insisting policy remains restrictive. That has pushed the US dollar slightly higher. Looking ahead though, we get the Fed minutes later today and also all eyes on the delayed non-farm payrolls, which could also give us some indication whether the Fed will cut rates in December. Along with that, Tuesday's RBA minutes added further pressure, signaling the bank will only cut rates if the labour market softens meaningfully or households pull back sharply. Either way, it has given many in the market that the next move could be a hike, not a cut. So let's see what happens there. Technically, though, the market is looking from the support case, that is from 64.30.50, and a bounce is expected from there as we continue to coast sideways in this 64.30.40 to 66-cent range. Turning to the euro, a little bit weaker as the dollar improves, but overall, I'm still giving the call to the upside, given the fact that the MACD is not fully broken down and the dollar is somewhat high. And let's see if we can bounce and look back towards the region of 117. The ECB, meanwhile, is firmly on hold with 90% chance of no change in December. So no doubt that would probably give us a little bit more upstep when it comes to the euro. Dollar yen push in, that is trying to get through this triangle. As we can see here, it's just holding on the line. And therefore, as it posts a 9.5-month high towards that end of the range of 155.60, there is still risk that we could see a downturn and a bull trap as this rising wedge is getting somewhat tired and the MACD is flat. So therefore, I do anticipate a move down to the 154 region and reassess. Sterling also a little bit mixed as it now records a slightly weaker day, but overall could start to see a bounce, that is from 130.80 back to 132. The UK CPI hits this Wednesday with the headline expected to be around 3.6%. Along with that, Thursday brings the long delay, as I mentioned, September's non-farm payrolls. Finishing off with commodities, it's finding a little bit more of an upstep when it comes to gold and looking back towards 4,100 as a potential target. And if so, could actually see on to 4,150. And any weakness likely to find support from the lower range of 4,000 figure to about 4,035. And finishing up with oil, the market has recovered, and since the base that was around 58.40 looks up towards $62 a barrel, and look for that rally and maybe on to around 63. I like the way the technicals have firmed up, so that reinforces the upside move. There may be a little bit of a trend here, but nevertheless we can see overall that the break is very close for that rally. Well, that's a wrap. Thank you for joining me. As always, look out for the interest report. I hope you enjoy the great start to the day.